Welcome back to the Buildatrader YouTube channel. I hope everyone's having a wonderful day. In this video, I'm going to be talking about higher time frame market structure. Now, those out there watching these videos and learning from this, you need to be watching them in order because they all build on top of each other. So, anyways, without further ado, I'm going to head to the charts. Let's cue the intro.
Don't stop running towards your dreams.
Alright everyone, here we are on the charts. Right now we're looking at the dollar yen USD JPY. Now right now we are on the weekly time frame here and we're going to dive right into things. So we're currently looking at this area right here. I'm going to draw an arrow so you can see this whole black push, these black candles, this whole bullish push. And then looking at this push right here too. This bearish push, it came down, right? It came down to here, okay? Now what these arrows are illustrating is an uptrend market structure, right? So I briefly brought up market structure in identifying trend direction. Now all that goes hand in hand with each other. Before I can, bring up other little things like support and resistance and other technical levels and this and that, you need to know this stuff right here. This is painstakingly beginner for me to break down, but you really need to understand it because if I mention other things, it's not going to make sense. You have to have a strong understanding of what market structure is and just being able to read which direction the trend is going based off the candlesticks before we start diving into other concepts such as support and resistance and supply and demand and all that. So you can see that market pushed up, pushed down, next it pushed up once again, right, made a higher high, so this is a high point, higher low, higher high, and you can mark this up so you can see, remove these arrows. This would be known as higher time frame market structure, because as you can see, this is obviously the higher time frame, we're on the weekly time frame. You can see that the higher time frame market structure is currently up, right, because it's making higher highs and higher lows as I just illustrated. So these purple little half circles representing are the swing high and swing low points. See, this was the low, broke this level, which as I mentioned, this is going to confuse you by me saying this. However, you're going to learn this in the next couple of videos. But the market pushed up, made a high, came back down, made a higher low. Because this low right here is lower than this low down here. This low right here is higher than this low down here, which makes it a higher low point. So next, mark me another push, make another higher high, right? So mark up this high as well. And now you can see that this high point is clearly higher than this high point to the left. Okay? And once again, market had a pullback and made some type of higher low down here. Okay, remove this arrow. You can see this is what basic uptrend market structure looks like on the higher time frame. Okay, now you can see there's not a lot of details as I mentioned in the identifying the trend video. So let's go down to the daily. We're only going to stick to the higher time frames because you need to learn how the higher time frames play out the lower time frames. Obviously, in order to learn that, you have to learn how the higher time frames work. You gotta learn how the lower time frames work. And then the last step is learning how they move with each other and how to correlate those time frames. So we'll learn that, or I will teach you guys that in the third video of this market structure series. But for now, we're just looking at the higher time frame. So we'll add some more arrows here since we have some more details. So here's that bullish push that I marked up on the weekly time frame. Okay, now we can see that there's a little minor pullback here, then made another high, another high low here before making this high that was made on the weekly time frame. Now you can't see these details in the weekly because the weekly time frame shows 1 week of data. So during that whole entire week, these little candles on the daily time frame don't mean too much because out of 5 candlesticks, 2 bearish and 3 bullish candles outdo the bearish pressure, which is why the candle still pushed bullish, still pushed higher. So there's more bullish data than there was bearish. There's more buyers than sellers at that point in time. So just minor pullback, made a little higher high, just a minor one, another little pullback before breaking up to the upside again. Okay. After we hit this high, you should expect a higher low point somewhere, which is here. Now you may be saying, well, isn't this right here the higher low? And since it broke, doesn't this mean something? Well, it can, yeah, but that's a little more of a deeper concept, which we'll learn in the next video. For now, just pay attention to this simple stuff. So, after you made that higher low point, the market made a high, and then made another higher low here. Push up to make another higher high. You can see that the market went from bullish to bearish, back to bullish, right? Because it went from higher highs, higher lows, made a bearish push, made a high, made another higher low. An uptrend market structure is higher highs and higher lows. And that's what I'm clearly drawing here, right? Okay. See how the market pushed up, pushed down, pushed up, pushed down, pushed up. Make another higher high. I'm gonna mark these with the half circle so you can see a little better. And remember the point I made just a few minutes ago, how each time frame has its own market structure. You know, that's why we're looking at the higher time frame, and the lower time frame has its own as well. And that, many times, it illustrates an entirely different picture than what is actually going on the daily and weekly. Because there is a trend within a trend within a trend in each time frame. It's like their own little universe, if you will. They all have their own rules. So these half circles, you can see higher high, higher low, higher high, higher low. See, this low is higher than that low over here. Pinned down here, this low did not. This high is higher than this high to the left. And then this high to the right is higher than the high to the left as well. So higher high, higher low, higher high. Made another minor pullback. This little area here. You fix this arrow. Another little area. High low point. Pushed up. Made a minor higher high. Still was higher than this candle here. Still a higher high. Came down. Respected the same low. It's fine. Nothing was violated until the market pushed up once more to make a new higher high. As you can see, and that trend keeps going on and on. That uptrend keeps going on and on up until we hit a point of resistance, if you will. That's what it would be called. I'll show you that soon. However, the market pushed up to a point of exhaustion or to a point of resistance where it got really extended, and then from there transferred into a downtrend. So before we dive into that, let me add these half circles still. High, higher, low, high. I'm only adding these on here so you guys can see the swing points easily. Okay, to me this looks a little messy, but I know when I was first starting, I didn't see this price action clearly like this, and when these were put on for me, I was able to understand the market movements and market structure a little better. So we got this higher high here. From there, what happened? The market pushed down. It violated our uptrend. Alright, because as we know, the market makes higher highs and higher lows, as we can see as what I just illustrated, and I'll draw it just in the arrow, classic textbook form. So we know this is how an uptrend is supposed to always look like, right? A series of higher highs and higher lows. It shouldn't be breaking any higher low points, because if it does, that means the market's moving from bullish to bearish. Okay? And that's what's happening here, where we're at right here, where you can see the arrow. So you see the market push down. This little higher low point was violated. So if a higher low is broken, you'd expect a lower high next. Okay, that's what we have here on the chart. So here's our new low point. Market then pushed up, made a lower high here. So let me fix these arrows. Okay, add these swing points on. As you can see, made a low there. Made a lower high here. So this high is lower than this high to the left. Okay, here, this whole entire time I was explaining the highs kept getting higher and higher and higher. This time, it's lower than this one on the left. The market's transitioning. So this, on the example of the arrows down here, this is what it looks like. Here's that first push. Here's the lower high that we're currently on. This example right here is exactly what it looks like when the market transitions from bullish to bearish, from bullish market structure to bearish market structure. Okay? The market pushed up, made the lower high, came down, made a new lower low point, up until market is trying to decide what it's going to do next. Is it going to make a lower high and continue down? Or are we going to break this point right here and continue higher? And I don't know what it's going to do yet, because one, there's this daily candlestick just opened, there's 22 hours 56 minutes. However, based off the higher time frames and the market structure examples I've been showing you, I'd be more inclined to say the probabilities to the downside. But if this level breaks right here, it's going to break up. But you know, that doesn't really matter too much right now, because we're just looking at the higher time frame structures. So again, the next point would look like that, hopefully. Then you get another lower high and another lower low to make this bearish market structure to continue on with the downtrend. Now this might be a lot of information to take in, but this is a very, very basic concept. You have to understand that the market makes higher highs and higher lows in an uptrend, and lower lows and lower highs in a downtrend. And knowing this information and knowing how to recognize where these points start and end is how you take trades and how you make money in the market. And in order to understand where these points can start and end is by going to the lower time frame and looking at more details. And by knowing that, utilizing the higher time frame as we were on, the daily and weekly, and utilizing like the hour, 2 hour, 4 hour, you're able to get more details and get, you know, take advantage of these lower prices and these higher prices, take advantage of the swings. And we're just going to drop to the 12 hour just so you can see a little more detail. You know, there's a little more, there's twice the candlestick data as we were just on, so you can kind of see the trends with a little more rich detail here. You know, low point, higher high, yeah, high, higher low, higher high, higher low, higher high, and so on and so forth, as you can see. And next video, I'll be going in more in depth on the lower time frame market structure, and then from there, explaining how they both go hand in hand with each other, how to recognize how to combine time frames. It's called time frame correlation. How to correlate your time frames with market structure. But that's all for this video, and I hope you guys got some good knowledge out of this one, and I'll see you on the next one.